Hello, everyone, and welcome to the SIP. I am your host, Jodi Hall, the CEO and president of the Mortgage Collaborative. The SIP is a space for fostering collaboration between lender members and partners. When we think about meeting up for coffee or an adult beverage, it's about catching up, sharing ideas, and connecting, much like the camaraderie that we see within the TMC network. The vision for the SIP is simple yet impactful. It's a platform to unite partners and members, showcasing real world case studies where collaboration solves industry challenges. After all, collaboration just isn't part of our name. It defines who we are and the mission to make a meaningful contribution to the industry. So thank you all for joining us and for participating. We often ask, what is in your cup and what are you sipping? So today, in honor of the Kentucky Derby on Saturday, I'm having a not so mint julep, where the only thing that resembles a mint julep is the sprig of mint in this drink. And of course, out of the 150 Kentucky Derby glass that I made sure that I picked up in person last year, but it's the 151st running of the Kentucky Derby on Saturday. We'll be watching, and those who know me know that I go or I watch, and there's some people that are listening that are also frequent that I see out in the paddock area eyeing up the horses to bet on. So sponsoring today's show is Bungalow Funding, represented by Brian Simon, the managing director. And Brian invited his close friend, I hear, and fellow capital market guru, Alex Hampton, the president of capital markets of Atlantic Bay, an independent mortgage banker headquartered in Virginia Beach, to showcase their collaboration. So welcome to the show, guys.
Thanks for having us.
For sure. So I recently met Brian at IMB Annual. My friend Ryan Kuby of Annie Mac, he and I had gone to have an adult beverage or two. And we went over to Kirk Donaldson of Halcyon's party, who's also a partner of the Mortgage Collaborative, and Brian was there. And Ryan introduced us. So I had the opportunity to meet Brian and Bungalow Funding just in advance of me starting with the Mortgage Collaborative. I also read that you're affiliated with Baltic Capital, a global alternative investment firm. So Bungalow is a vehicle used to secure MSR assets for a group of investors, and you manage $25 billion in assets. Is that right?
So yeah, and thank you, Jodi. It's probably easier if I just take a step back and give a quick overview of like Bungalow and Baltic, because we are providing all the services across both the Bungalow and Baltic infrastructure to the TMC members. So we really, we have three sleeves of investment. One is Bungalow Funding, and that's our MSR fund. So we are acquiring MSRs, both flow and co-issue and bulk, in all its flavors, agency. And then sort of under the Baltic moniker, although it's really we're all one family, we have two other investment strategies. One is we have a non-agency whole loan company where we buy non-QM and DSCR and IT and super jumbo and doctor loans and all that kind of stuff. And then we have a what I'll call sort of my own moniker for it, like like I call it like a non-performing or distress sleeve, where we are among the largest buyers of agency scratch and dent, which we've traded quite a few with Alex and his team, or NPL and RPL and Jodi EBOs and things of that nature. So we really cover pretty much everything across the resi mortgage infrastructure, and we want to engage with all of the TMC members on these things, with the exception of we're not looking to replace your regular daily aggregator of whole loans, agency loans. That's not our business, but non-performing, non-agency, and MSR. And so we do all those things. And it's a little confusing because we operate sort of under two names. Bungalow is the agency-approved master servicer, hence it has its own legal structure and nomenclature.
Awesome. And then Atlantic Bay Mortgage Group is a National Mortgage News 2025 Best Mortgage Companies to Work for award winner. And not just an award winner, but you were #1 for large mortgage companies. So congratulations on your success. Atlantic Bay really is a powerhouse in the IMB world, and I'm proud to call them a member of the Mortgage Collaborative. But Alex, for the audience, do you mind telling us a little bit about yourself, your role at Atlantic Bay, and who Atlantic Bay is?
Sure. I'm Alex Hampton. I'm president of capital markets. So I'm just involved in the hedging of the pipeline, margin management, trading loans as well. That's where I get involved with Brian here a little bit when I'm having to trade some non-performing loans. We're an independent mortgage banker. I've been here since the day we started, so I'm 28 years going on, and we've been independent the entire time. We are a seller servicer, both the agency and Ginnie Mae. And we also do a wide array of products from your non-QMs and jumbos, things like that, second mortgages. But most of my main focus is on the capital market side with hedging, trading, and just doing an evaluation of retain release on the sale.
Awesome. So 28 years, huh? So you started when you were 11?
Yes, I would love to be able to say that. Time is flying, but
so when I was talking to Brian, we were getting ready for this call. It sounds like the two of you go way back before business. So, but do you want to tell the group, besides your personal relationship with Brian, do you want to tell the audience how you were introduced to Bungalow and the problems that they solve for Atlantic Bay?
So I probably first was associated with them probably a little bit before Brian got there. We, sending out bids for scratch and dent. I don't know if that's really a great term they like to use, but I'm old school, so I'm going to use it. Non-performing.
Unfortunately, we all know what you're talking about.
But and I would send bids out. I'd use sort of a middleman to shoot bids out to around 10 or so scratch and dent buyers. Baalbek at the time was one of those. So I was used to doing a handful of loans a year with them. Brian and I have a mutual connection through a consultant up in the Philly area, and sort of got introduced to him that way, as well as a couple of other coworkers that knew him through some dealings. But he came on with Bungalow. Started dealing directly with him at that point on my scratch and dent sales. I do probably about 2 a year. Gives me the insight of what he's looking for, volume amounts that might help sweeten the pot a little bit. It's just good to have somebody to deal with directly. It's a quicker process than sometimes going through somebody that's kind of brokering that out for you. It's obviously a little bit cheaper too. You're not paying a point or so, or maybe a little bit less on that sale. So and it's always been a good bid. I think every time I've ever even done a scratch and dent, Baalbek or Bungalow now has been, picking up a good bit, and sometimes it's just a couple of loans, first to get started. And then, unfortunately, as volumes have grown, scratch and dents are a little bit more than we're used to, prior to COVID.
Yeah.
But, so, getting a good deal on, a $2 or $3 million tape, and and we obviously bid that out, several ways, but Bungalow has been probably winning the lion's share of that here over the last year or so. And Brian, I can just contact him and say, hey, this is what I got. This is what I'm going. This is what I'm going to send you. It's a quick bid back, and process is really easy.
Yeah, it's kind of like you want to be the case study to join someone, and but you don't want to air all of your dirty laundry. But Alex, truly, anybody that has been in the lending space, we'd all be lying if we said that we didn't have our fair share of scratch and dent loans to be bid on. So. Brian, Bungalow utilizes best-in-class proprietary technology, process, and products to help ensure that you set your clients up for long-term partnerships and success. And Alex mentioned some of that from Speed, but how is your tech and process and products different from competitors, and why does that matter to our network?
Sure, and you're right. We're a very tech-enabled. We like to think anyway, leading edge as far as you can be in this industry. We want to use automation. We want to use technologized process, and how that benefits TMC members is in a number of ways. Firstly, we're able to look at a trade as small as a single loan, and we've looked at trades, of whole loans in the hundreds of millions, where most investors need to see some amount of scale. So for us, I think I'm going to paraphrase here because I don't have the figures in front of me, but we completed something like over 1,200 whole loan trades last year, with not an inordinate amount of people. And that's really due to the process and the technology that our team has built. So not only are we able to ingest trades of all sizes and price them quickly, as Alex articulated, but we can look across asset classes and move very quickly to return accurate bids in a really timely fashion. And it also lets us, augment our bundle of products. We've had clients come to us and say, on the non-agency, on the whole loan side, the performing whole loan side, could you adjust your view on this, or could we work with you with your jumbo product or your non-QM and sort of create a set of guidelines that we can underwrite to, and we can sort of work internally to craft products that are unique to a specific seller that works for them and works for their delivery base or their brokers or their realtors or whoever their constituency might be. So I don't want to go so far as to say our business is completely run on AI like many people want to tell, but we really do have great technology, and we feel confident, although of course it's hard to prove it, relative to our peer group. We think we are best in class.
Yeah, and we did hear that in Alex's comments about the speed, the differentiator, and that you're not a broker, you're going directly to the source. Sounds like highly customizable. And I know that we're joking about scratch and dent loans, but one of non-QM is a lending sector has seen remarkable growth, with market share increasing less than 3% in 2020 pre-pandemic, up to 5% in 2024. And this is driven by high margins, volume growth, strong demand for borrowers who don't fit agency guidelines. Non-QM loans are poised for further expansion, and I believe and anticipate that with the removal of the I-10 product from agency guidelines, that this will continue. So Brian, what are the non-QM products that you invest in and that you're focused on?
Yeah, I mean, really, it's across the spectrum. I mean, we have, the SCR, sort of investor cash flow, I-10, super jumbo, the performing high quality super jumbo. We have a doctor loan program, which always makes me laugh when I say it, because when I ran originators, that was the product that I'm sure Alex can relate to. Every originator said they had to have, and then they did none. But nonetheless, we have it.
They still want
it. they need it. They need it. And what makes us able to be successful there, and also for the non-agencies, for those capital markets, sort of Bloomberg users on the call, if you see any deals come across under the PRPM moniker, that's our shelf. Last year, we were the second most prolific issuer behind, in terms of number of deals, behind only JP Morgan in RMBS last year, over 60 transactions, total 22 alone last year. So we're in the market like every other week with the securitization. So we truly are the end point for this stuff. And so it lets us not only have good visibility into the market, but provide, we think, sharp execution for our clients.
Yeah. Awesome. And then Alex, what's Atlantic Bay's kind of non-QM strategy, and specifically related to Bungalow?
So definitely the non-QM space has been growing quite a bit. Since we've came out of the pandemic, and we do utilize quite a bit of product on the DSCR in certain regions, some bank statement type programs, and what Brian and I have been recently talking about over the last couple of weeks is on the higher end jumbo space, doing some bulk on that to try and maybe pick up a little bit of gain there, going through the bulk route as opposed to maybe going through an aggregator on the whole loan side. And another, what I was going to kind of say when he was talking just a little earlier, they're certainly a little more flexible, with maybe some of the bulk sizes than we've talked to several banks who want some larger bulks that maybe some smaller IMBs might not be able to attain, and in a timely fashion. It's somebody like me, it might be a little harder to come up with a 50 million or $100 million block of jumbos that'll fit a certain credit box. So working with Brian, he's giving me a little flexibility on that if I wanted to look into it. So that's certainly something that his company's been able to do as well. But yeah, I mean, we're still looking at that sort of traditional non-QM to keep growing. Obviously, with some of the changes with the I-10 through the agencies, which was a pretty tough road to get down if you wanted to do an I-10 with them anyway. Just speaking to underwriters, but some of the qualifications, it was almost impossible. But a lot of that's still growing. Not sure I could bulk that up myself at this point, but definitely looking at some of the jumbo space, since that securitization market has opened back up again. We'll say it kind of sort of goes in and out, but it seems to have been pretty strong for a little while now.
Yeah.
I was always of the mindset before a few years ago that sort of non-QM was going to be a little bit of a flash in the pan, because I mean, like if you have a choice to originate conventional rate and term refi, that's what you're going to do. I mean, the margins are generally pretty good when it's in a rates down environment. But given that we've been in this consistent high rate environment, it looks like it's not going to go anywhere anytime soon. And given the fact that the vast majority of the 14 trillion of outstanding agency loans are below 4 7/8, so we're not going to run into a rate and term refi boom again anytime soon. I think alternative products are here to stay. And so to Alex's point about securitization opening back up, the investors have a demand for product just as much as the sellers and the lenders do. And so I think you'll continue to see, a natural progression of these products getting, hopefully people will be smart about it, the investors, but sort of a widening of the credit box and an expansion of the opportunities to serve more consumers.
Yeah, and Brian, you actually were accurate about the non-QM as a flash in the pan, because if you remember it was a flash before it became a thing, went away right because of warehouse lending capacity when the pandemic started, went away, and now has started to build back up. So it was a flash in the pan, but I too think that it has come back and has its place, and it is a strategy that is working into most successful mortgage lenders as we know it. So I was a lender for many years. I say that I'm a recovering lender. And I remember the dreaded aged warehouse line meetings with owners of an IMB. And every week we talked about the exact same loan. I can still, the very first age loan that I ever have, I still remember the name of it. For privacy reasons, I will not say what it is or where it's located, because I think I even still remember the address off of the top of my head. But I really could have used a Bungalow in a few different times in my career. But Alex, what is the gnarliest age loan that you have sold?
If it was a really gnarly aged loan, we probably just went ahead and kept it, because it's probably been bid out 10 times, and the owners have said we'll just keep it. Sometimes, scratch and dent, non-performing. Sometimes you just have performing scratch and dent loans. Obviously, there's agency miss there, or jumbo miss with a particular investor, or something just didn't get caught and it took the debt ratio up. So, sometimes, depending on a company's cash position, you got a performing loan, depending on the note rate, obviously, too, how you're going to be arbing that. Sometimes, if you're able to, you'll keep some loans, and then sometimes you'll go ahead and put them out for bid for the sale. Yeah, I know some real old ones I still have in portfolio, but we try and keep that. We'll do a sale about twice a year, like I said earlier, just to keep it as clean as possible. I scratch and dent market coming out of COVID. You always heard pricing was really bad. I think I attribute that really more to the pricing isn't bad. Your vintage COVID loans that missed were 2 and 3 handles. They were going to be bad if you could sell them to the agency. You were looking at an 85 or a 90 going agency on that.
Yeah.
So, and that's, you kind of had to look at it that way. It used to be, hey, we could get 90 to 95, on an average tape, and then it went to like 70 or 75, and I would have to show to the powers that be. It's like, these old tapes were 6 and 7 handles, and now we're trying to offload 2 and 3 handle rates. So I don't know that it really went. It probably wasn't great, but it didn't go. It wasn't as bad as it looked, just because of the loans that were going for sale probably in 22 and 23, that were misses from the COVID rates.
Yeah, I remember underwriting over the years, underwriting appraisals, and had a wall of fame of the craziest things that we would see from a property perspective that we were trying to get loans on. And I worked in the subprime market prior to IMB, so you can imagine that there is a few of those. But Brian, you definitely see these scenarios through a different lens, in being able to provide liquidity to lenders. But tell us what you feel has been your greatest success story.
Well, let me first, just if I can address the comment you made before Alex spoke around, the age warehouse. So we actually have relationships with many of the warehouse lenders, probably many of the lenders, that's because it's not an issue for banks, obviously, they have a balance sheet, but many of the warehouse lenders that serve many of the PMC clients, I would assume, where we work with them, with the warehouse lenders directly. We've approached this in 2 ways. We have relationships with the individual sellers, but also the warehouse lenders, where they see one of their borrowers, the mortgage company borrowers, getting in trouble with an age portfolio, and we've been able to step in. They've made that introduction of us directly to their client, and we've been able to facilitate like an orderly transition of some of those assets before it gets ugly for either side, because it can get ugly. And sometimes, the warehouse lenders, we forget they're normally, federally regulated banks, and they don't have a lot of latitude around how long they can leave assets on those balance sheets. So we have actually built relationships with many of counterparties to do that. And so it's worked out really well. And I'll tell you, we're not really thinking about individual loans, just even though we can buy a single loan. Generally, we're thinking more in the aggregate. But I can tell you that I have seen very few loans, with the exceptions of one where obviously we anticipated there was some sort of fraud there or something, and that's why it was a buyback. But where we have not been able to facilitate a reasonable transaction for one of our counterparties, whether it's an agency kick or some sort of an NPL, RPL, or something like that. There's a reason why, I don't know the numbers, but I would say we are involved in better than half of those transactions of sort of like performing agency scratch and dents, and even non-performing that get kicked and then subsequently retraded. So, we're competitive, relative to the market in terms of price. Nobody really wants this. We recognize no one wants to sell a performing agency loan at a discount. It is what it is. We try to make the process easy and we try to make it fair. It's still not always painless. So I would say in general for me, like how I view, the success story is sort of like the aggregate results and the continued like repetition of the clients coming back to trade with us. And like with Atlantic Bay, where historically the relationship with Balbec was a scratch and dent here and there. Now I've been interacting with them on potential servicing trades. Alex and I have been working on potential, jumbo and other product trades. And so we really like to position ourselves as a holistic liquidity provider to IMBs and banks and credit unions too. But really, like every product that you could think of, we can help you with. Again, of course, I'm just not trying to get in the way of like buying your day-to-day, cash window agency sales. But anything else, we want to make it easy, fast, and be sort of that counterparty that you can sell the majority of these types of assets to on a regular basis. We manage our own capital. So we're in the market constantly. We're trading every day. We manage a lot of capital, as you referenced earlier. So, we have our price is consistent. Products are consistent and constantly expanding. And our technology and process makes it really easy to trade with us. And because I come from the origination world, my background is running companies like Freedom, Caliber, New Resident, which is how I know so many of the counterparties, so many of your members. I remember what it was like to be on Alex's side of the table and how I wanted to be treated and how I wasn't always treated that way. So we want to make that a pleasant experience. So by the way, most of the people we interact with are my friends anyway. So I think that ends up coming across.
Yeah. And, liquidity for mortgage lenders, for credit unions, for community banks is greater today than we've seen in previous years. And our lender members in the industry need partners like you, Brian, and Bungalow. So, and thanks for pointing out the point about warehouse lines, not a point I had thought about, but I can see that everybody wins when those loans come off of the warehouse lines and puts everyone at ease. But I know that you do not have a sales team, but if you're a lender member or anyone that is joining the call and they want to learn more about your services and how can they reach out to you and get in contact to do business?
Yeah, they can just email me directly. Very simple, bsimon@bungalowfunding.com. For the ones that don't know who I am or how to get a hold of me. And I'll respond. Anybody who knows me knows if I'm not sleeping or in the air or something where I can't be reached, I'll respond virtually right away. And we don't have a formal sales team, but we do have a team of individuals that work with me that provide support. So we'll reach out quickly and we'll do everything we can to either chat about the products or solve the need if there's an acute need.
Awesome. So thank you again for joining the 6th edition of the SIP, sponsored by Bungalow Funding, TMC's liquidity partner. You can find us here next week, Tuesday, May the 6th at 3 p.m. Eastern. And yes, I meant 3 p.m. I didn't make a mistake. We have a little change in our lineup. We're going to be doing this show for our members at 2 p.m. Eastern, and then we'll be casting here on LinkedIn Live at 3 p.m. Eastern starting on May the 6th. So thank you all who tuned in. Thank you, Brian and Alex, for your time today. And make sure that you get your bets in. I will be betting on Rodriguez. And until then, enjoy.
See you guys. Thanks, everybody. Take care.